This is Nick.
This is Jack.
It's Thursday, the new Friday, September 22nd, and today's pod is the best one yet, baby.
It's the best one yet.
Except the Dow Jones Industrial Average did drop 500 points yesterday.
And the S&P 500 index fell by nearly 2%.
Yeah, more on that in our second story. In the meantime, Jack, what's the first story for our T-Boy?
SmileDirectClub just fell another 10% as people stopped buying those invisible braces.
Because SmileDirectClub is living in the wrong matrix.
Neo.
Morpheus.
For our second story, the Federal Reserve just raised interest rates by a record amount again.
And it all comes down to a game of chicken.
Our third and final story. First, Spotify did music. Then, Spotify did podcasts. Now, Spotify's doing audiobooks.
Because spider webs feel good. Was that uncomfortable the way I said good?
It was just uncomfortable enough. Yetis, before we hit that wonderful mix.
A wonderfully uncomfortable mix, Jack. I love this mix.
Hold on to your horoscopes.
Yetis, we're transitioning moons to the sign of Libra.
The sun and Mars just aligned with Jupiter.
Directly over the equator. What are the odds?
Because today, September 22nd, is the fall solstice.
Today, September 22nd, is the autumn equinox.
We're talking the end of summer, the start of fall.
Fold away your capris, whip out the wool.
Today, there are exactly 12 hours of daylight and exactly 12 hours of nighttime.
Yeah, so like our long summer days are now turning into long fall nights.
Which means a few things.
For example, we know that you just lit a Yankee candle because it's almost dusk.
And we also know you tossed on those corduroys because it's brisk out, it's layer season.
Yeah, Jack, hold my gourd. I gotta wrap this thing in flannel.
But the real question, are you hitting the pumpkin patch this weekend or are you hoeing down the hayride?
Trick question, neither. You're going apple picking and you're doing it with your new significant other.
But this isn't just astrology, astronomy, or cosmetology, Nick.
No, it is not.
It's also about the economy.
Because the autumn equinox kicks off the most important spending season of the year.
First Halloween outfits, then Thanksgiving travel.
And then Christmas gifts, and then Hanukkah presents.
Yetis, toss on your slammin' salmon sweater.
It's spending season, baby.
Let's hit our third story.
15 years before this song, two boys from the Northeast met in the dorm. They had an idea that caused a cultural storm. It's the best one yet, but the best is the norm. Jack, Nick, that's it. I don't even think they need to practice. 50%, that's a fat tip. T-Boy City on your at-list. If you know, you know, cause we ready to go. We can't wait no more, so just start the show. Start the show.
For our first story, SmileDirectClub dropped another 10% because your mouth is sick of being told what to do.
SmileDirectClub is living in the wrong matrix.
During the pandemic, everyone knew what you were doing. We were all doing these things.
We were all ordering DoorDash. We were watching Netflix. We were pimping our crib with some Pottery Barn furniture.
Yeah, but Jack, what was everyone's dirty little secret during the pandemic that nobody knew about?
For millions of us, it was braces.
Braces.
Invisible adult braces was your sneaky work-from-home hero.
In 2020, Invisalign sold a record 1.6 million clear retainers. That was a 40% jump.
And it's all because of the Zoom effect that was going on.
The Zoom effect, because you weren't hanging out with people during the pandemic.
So you weren't embarrassed by braces on your teeth.
You had extra cash during the pandemic.
Because you canceled the Magic Kingdom vacation.
And the only part of you anyone saw at work was your face on a screen.
Because you were zooming into work.
So people splurged a few $1,000s to nudge that incisor into a straighter position. By the way, Jack, did you notice Molly's teeth the last time you saw her?
No, I did not.
Well,
I mean, they were beautiful as always.
That is what we were hoping to hear, my friend. She was using Invisalign during the pandemic.
Wait, her smile was even better the last time I saw them before?
Incisors are like at exact 90-degree angles now.
I did think it must have been some kind of an optical illusion.
It was the dirty secret of the pandemic.
They're real and they're fantastic.
But Jack, it's a different situation today for your molars.
You're not stuck at home like you were before.
Nope.
You have less cash than you have in years.
True.
And you are vacationing.
Your mouth doesn't want to feel micromanaged by like a pair of SmileDirectClub braces.
That's a big reason. Direct-to-consumer tooth straightening startup SmileDirectClub has come crashing down as growth of their business has stopped.
Just in the past week, SmileDirectClub stock has dropped another 10% on their newest news update.
They're quitting some countries and they're slashing costs.
But Jack and I saw this headline. We jumped in T-Boy style, and it got us curious about one very particular thing.
Why is SmileDirectClub doing so much worse than all the other pandemic winners?
Netflix, Zoom, Peloton, their stocks went up during the pandemic and they've fallen back down.
But SmileDirectClub is a different story. Nick, their smile is broken like a Mick Jagger snaggletooth.
Their stock has plummeted, get this, 95%. Where's it trading now, Jack?
In the dollar store. That's where it's trading.
This stock is $1.
It's $1.
It's $1.
It's a George Washington.
Their sales are 1/3 of where they were during the peak of the pandemic.
It is unusual for a pandemic winner like SmileDirectClub for their business to shrivel to nothing so fast.
We had to figure out why SmileDirectClub is so upside down. So, Jack, what's the takeaway for our buddies over at SmileDirectClub?
Call Morpheus.
Morpheus.
SmileDirectClub is living in the wrong matrix.
Yetis, picture a matrix. Not like the movie Matrix, not Morpheus, not Neo. Picture
Yeah, ignore that Morpheus reference.
a math matrix.
Picture those 4 quadrants, like up on the chalkboard in high school algebra.
And on one side of that math matrix are the 2 customer types.
You got the budget shopper and you got the luxury shopper.
And on the other side of that math matrix are 2 price types.
You got a budget product and you got a luxury product.
Well, SmileDirectClub operates in the most challenging, vulnerable, difficult, really, really hard matrix quadrant of them all.
SmileDirectClub is in that awkward square that targets budget shoppers with luxury products.
Even though SmileDirectClub is the cheapest option by far to straighten your teeth, it's a lot easier and faster than an orthodontist, it still costs you $2,000.
The average SmileDirectClub customer is earning $65,000 a year. So $2,000, that's a non-essential luxury splurge.
That's a whole lot of money for a budget shopper.
Budget customers aren't splurging on expensive things because the cost of living is surging.
And that is why SmileDirectClub is so banged up.
It's living in the toughest matrix. Wait, dude, did we just get through this story without doing one of these?
Keanu. For our second story, oops, I did it again for the 3rd time in a row. The Federal Reserve has increased interest rates by a record amount.
Here's the one big question.
One question.
Who is going to blink first?
We got a game of chicken, Jack? Is this a game of chicken?
It's a game of chicken, Nick.
Okay, Yetis, full disclosure. This is Nick, this is Jack, and we have one job on this podcast. What is it, Jack?
Make today's pod better than yesterday's pod.
That's why today's pod is the best one yet. It happens to be better than yesterday's.
Oh, Jerry Powell, the chairman of the Federal Reserve, he has one job too.
Yeah, and his job is to stop prices from rising, like freeze inflation, man. That's the job.
Fix this inflation problem stat. Your only hope.
I paid $20 for a pint of ice cream. I'm not happy about this.
So yesterday at the Fed's big policy meeting, he tried to do just that.
By raising interest rates by 0.75%.
That seems like a ridiculously small number.
It does seem like a small number. That's true.
But it's actually a record interest rate increase.
And to sprinkle on a little more context here, it's actually the 3rd straight Fed meeting with a record interest rate increase.
Last year, the Fed's benchmark interest rate was 0%.
Today, Jack, where is the Fed's benchmark interest rate?
After all those record increases, it's all the way up to 3%.
Now, besties, when you hear about the Federal Reserve, don't just think of it as our nation's central bank. In reality, the Fed is an economic influencer.
It is the economic influencer.
The Federal Reserve is the Kim Kardashian of cash.
It's the Addison Rae of the economy.
It is the Mr. Beast of money. Jack, can we say it's the Charlie D'Amelio of lending?
I think it's actually Charlie D'Amelio of the mortgage industry.
That is so good. Let's go with that.
Yetis, when the Fed changes that interest rate, that influences all borrowing rates across the whole economy.
Case in point, Jack, what's going on with the 30-year mortgage?
30-year mortgage rates have jumped by 3 percentage points, from 3% a year ago to 6% now.
Because of the Fed.
5-year car loans are over 5% for the first time since 2012.
Because of the Fed.
Remember how Peloton used to let you finance the bike entirely, Nick?
Oh, totally, Jack. Pay nothing now. Pay 0% interest. We got your back.
That's not an option for the new Peloton Row we announced yesterday.
No, it is not. You got to pay the full $3,200 cash up front for that thing. It's not getting financed.
The Fed has raised interest rates by a bunch. and it's influencing every borrowing rate in our economy by a bunch.
It's the Charlie D'Amelio of the money you borrow. So, Jack, what's the takeaway for our buddies over at the Fed?
This is a game of chicken.
Yeah, it is.
Who is going to blink first? Companies or consumers?
Now, besties, there is a way to get prices to fall, but it's gonna require someone to sacrifice.
Either we consumers gotta stop buying as much stuff,
or companies gotta make less profit.
The Fed is using interest rates to slow the economy down, but it's still not clear who's gonna feel the most pain.
Either consumers are gonna be hurt by buying less, or companies are gonna be hurt by making less money.
It's a game of chicken to bring down prices.
And someone has gotta blink.
Now, a word about our sponsor, Robinhood.
You can do just about anything from your phone, but some industries, they've just been slow to move.
The finance industry was slow to move from phone to computer, and then from computer to app.
Robinhood wasn't. It's the Silicon Valley-based brokerage that's been updating apps since it was born in 2015.
Using the Robinhood app for your stocks and crypto is almost as easy as downloading it.
So you can invest at your pace on your terms by downloading the Robinhood app.
If you're not investing on Robinhood yet, to get started, go to Robinhood.com/TBoy and choose your free stock.
That's Robinhood.com/TBOY. Limitations apply.
Stocks are offered by Robinhood Financial LLC, member SIPC.
Crypto offered through Robinhood Crypto.
All investments involve risk.
By the way, this podcast is not owned by or part of Robinhood, and we are not employees of Robinhood. For our third and final story, Spotify finally launched audiobooks, growing its audio empire.
But we're honestly asking the question, why?
We're going to throw that out there. Why?
Why are you doing this?
Well, for the answer, we're going to travel back 1 year to November 2021.
Nearly a year ago, Spotify paid $119 million to acquire Findaway.
Findaway, an audiobook startup that happens to compete with Amazon's Audible.
Well, this week, Spotify finally put that acquisition to use.
Boom.
Launching audiobooks.
Yeah, and so Jack and I jumped in T-Boy style, and we searched for all the light we cannot see in Spotify.
It's a fine novel, and it's right there.
$18.49 a la carte. You can curl up, listen to that page turner.
Yeah, you buy one book at a time. It's not included in the subscription. And no, you don't get any perks if you're a Spotify premium subscriber.
Yeah, the book is $18.49 for free and paid users. There's no cutting in this line, people.
Now, awkward situation. You can't just push buy.
This was an awkward situation, man.
You have to ask to buy the book, and then they send you an email, and you open up your email, and then you buy the book through a web page.
And that is because Spotify wants to avoid giving Apple a cut since they control the App Store.
It's clunky. It's a bunch of friction.
But so far, they've got 300,000 books on there, and pretty soon they're going to start recommending books based on the music you listen to.
They might notice that you've been listening to Adele's songs about breaking up.
Yeah, they're going to be like, hey, maybe you'll enjoy a Jane Austen novel about finding love.
Yeah, but right now, it's not that yet. It's just you, Adele, and a pint of Ben & Jerry's.
But Jack, it feels like we should ask that question.
Can we ask a stupid question, Yetis?
A podcast to a large audience feels like the perfect time to ask a stupid question, Jack. I love it.
Why is Spotify doing this? Why are they launching audiobooks?
Yetis, Jack and I decided we'd do a quick cost-benefit analysis to try to figure out why they're doing this.
On the benefit side, this will be a new revenue stream for Spotify.
Spotify is going to take a small cut every time you buy To Kill a Mockingbird.
Another benefit, Spotify thinks this will keep you in the app longer.
Podcast is 15 minutes long. A book, that's 15 hours long.
But then Nick and I couldn't help but notice the negatives, the costs.
For example, that startup they acquired, the audiobook startup, that cost them $119 million.
$119 million is more money than Spotify has ever made in profits in the history of the company.
And honestly, the audiobook market, it isn't that big right now.
Audiobook revenue last year was 1/20th the size of music streaming.
Now, Spotify says that's an opportunity. They think they can massively grow the size of audiobooks just like they did with music streaming.
But honestly, this feels like a lot of work, a lot of costs.
It is.
Not that much upside.
I hear ya.
And do you want to compete directly against the dominant player, Amazon?
I feel uncomfortable now, Jack.
Why is Spotify doing audiobooks? Honestly.
It sounds like you want a takeaway. Jack, what's the takeaway for our buddies over at Spotify?
Nothing feels better than sticky. Sticky as a spider web.
Yetis, this is the same reason we told you why Amazon was adding free Grubhub delivery to Prime a few months ago.
The more perks Amazon added to Prime, the more stuck you got to that subscription.
Well, we're looking at Spotify, we're touching Spotify, and it's starting to feel a little sticky.
It's getting sticky too.
It's getting sticky. At first, Spotify was your source for music on your runs, and then for podcasts on your commute.
And then Spotify added live audio for your weekends, and now they're adding audiobooks for your really, really, really long road trips.
Each one of those additional customer touch points is like a silky thread keeping you connected.
The more threads, the thicker the web, the stickier it is.
And the harder it is to unsubscribe. And if it's hard to unsubscribe, then Spotify keeps you longer, and then they can raise prices easier.
Spotify is not revolutionizing the book industry here.
They are keeping you sticky. Jack, can you whip up the takeaways for us for the new Friday?
SmileDirectClub is one of the worst performing stocks on Wall Street.
Because it's living in the worst quadrant of the matrix.
For our second story, the Fed, as expected, hiked interest rates by another 0.75%.
It's a game of chicken. Who's going to blink first, man?
Consumers or companies?
Chicken.
Our third and final story, Spotify just added audiobooks to the app.
Why are they doing this? Because they want to keep you sticky. Now, time for the best fact yet. This one sent in as a voicemail from Ben Harris from lovely St. Louis, Missouri.
Push and play.
Nick and Jack told us about a flamboyance of flamingos and a parliament of owls, but there are other fun names for groups of flying creatures, such as a cauldron of bats, a murder of crows, an unkindness of ravens, and my personal favorite, a thunder of dragons. Have a great day.
Oh, Ben, there we go.
The dragons.
Extra points for creativity, Charles Darwin. Not too shabby.
Alex just told me that a group of otters is
to me.
called a raft.
It's called a raft? Are you kidding?
Perfect.
Are these animals naming themselves?
It's very literal. Throw a Huck Finn on that thing.
But Jack, here's the best part. A group of rafts is called an otter. Yetis, you look fantastic today. And if you haven't yet, click to follow us, subscribe so you get us every single day. We'll be right in whatever app you're listening to.
I promise you, tomorrow's pod will be the best one yet.
We got a good feeling.
Nick and I will see you tomorrow.
Can't wait. And before we go, just a shout out to a legendary family of Yetis. Sam and Mendy Mall are listening together right now. They're a couple that T-Boys together.
Big shout out to Alex Mall too.
And a big thank you to Jennifer Osmond, who's been using the T-Boy takeaways on her University of Georgia Bulldog marketing class.
I'm a Gator fan, and I'm still saying go Dogs.
And a happy birthday to Zach Stanford over in Pleasant Grove, Utah.
And happy birthday to Daniel over in Westchester.
And a happy birthday to another Daniel, the Broncos fan, Paul in Boulder, Colorado.
That is the Stepmaster.
And to all our Yetis down in Puerto Rico, just so you know, Jack and I are wishing you our absolute best right now.
This is Jack. I own stock of Netflix, and Nick and I both own stock of Peloton, Spotify, ETFs of the S&P 500, and Robinhood. Now, a word about our sponsor, Robinhood.
Jack, rule number one about a kitchen renovation, tell your friends about your kitchen renovation.
We know the cabinets are expensive.
Well, in the pandemic, a lot of companies renovated their businesses, focusing on apps and digital.
Robinhood didn't have to. It was built digital from the start.
Robinhood's mobile-first and intuitive design makes investing a little easier for every stage of your investing journey.
Whether you want to trade options, ETFs, or stocks through Robinhood Financial, or buy some Bitcoin on Robinhood Crypto, you can do all that right on the Robinhood app.
If you're not investing on Robinhood yet, to get started, go to Robinhood.com/TBoy and choose your free stock.
That's Robinhood.com/TBOY. Limitations apply.
Robinhood Financial LLC, member SIPC. All investments involve risk.
By the way, this podcast is not owned by or part of Robinhood, and we are not employees of Robinhood.